Fed policymakers point to divergent routes for rate cuts. Welcome to Market Insight. I'm Elena Casas. Last week, Wall Street rallied to fresh record highs when Fed Chair Jerome Powell said that recent higher inflation readings did not change the underlying story of easing price pressures, and policymakers kept their average forecast to 3 rate cuts this year. But on Monday, Fed officials had widely diverging predictions. Chicago Fed President Austin Goolsbee said he'd penciled in 3 cuts. Fed Governor Lisa Cook urged caution, and Atlanta Fed Chief Raphael Bostic said he expects just 1 quarter-point cut. That's all ahead of this week's key data point, the Fed's preferred measure of inflation, the PCE price index, due on Friday. Well, to help make sense of all that, I'm joined now by Victoria Bills of Banríon Capital Management. Victoria, hi. When we last spoke, I know you thought 3 cuts this year would be too much. Why do you still think that?
In terms of how we're looking at rate cuts right now, the economy continues to, in the United States, to show signs of not necessarily cooling down. We just received some consumer pricing or consumer confidence numbers earlier this week that shows that consumer confidence is down relative to the previous month. And within the past 6 months in particular, consumer confidence remains to be steadily level at a very negative rate. What this means on top of what we're seeing with increased potential inflationary predictors is that we are heading to a point where, again, in order for the Fed to cut rates, we need to see the economy cooling down. And that has not shown in any of the data that we're seeing or any of the major data points that the Fed continues to follow. I would argue that potentially we can see 3 rate cuts, but I think that is going to be very contingent upon how the average consumer continues with their spending on a day-to-day basis.
What are you looking for then in this week's inflation data and other points that we have coming up in the coming weeks?
What I would be looking for in the next upcoming weeks, and then also with GDP numbers as well coming out, and I believe we also have PCE as well. I'm hoping to see if we have a decreasing in PCE that will provide me confidence that the Fed might be able to do their potential 3 rate cuts for the year. But again, as originally I had intended, I was hoping that we would have rate cuts in May, but it seems like that may not even happen. So June is the most possible timeline at this point.
Do you think, Victoria, that equity markets are moving away from being quite so Fed sensitive and reacting to everything that policymakers say as they have been in recent years?
I believe that that's definitely a factor. In terms of how we're looking at the current equity markets, stocks, I would say, are almost kind of trying to keep themselves afloat and trying to work off of the fundamentals of the companies overall. So while there are still some reactionary shocks that happen on a daily basis or that happen when the Fed is releasing news, I think a lot of companies have already begun to price in that perhaps what we are expecting from the Fed or the expectation in terms of rate cuts is going to be more in the future rather than in the present moment. So with that being priced in, I think that those shocks have gotten smaller, but a lot of what we're seeing in terms of equity markets right now is very much driven by fundamentals.
The biggest company news story so far this week has been Boeing CEO Dave Calhoun, who shocked the markets on Monday by announcing his departure. What can that company do amid all the safety concerns it's had to win back investor confidence?
The first step would be I believe the first step would unfortunately, letting the CEO go in order to allow for new leadership and new blood to come in order to come into Boeing. Boeing has had a long history going back to the 60s and 70s of being very much driven by not only safety, but also innovation. And they've diverted from that in recent years in exchange for shareholder profits, which, again, as someone who has been a proud supporter of Boeing in previous market cycles, they have been a very strong company to have when it comes to just their balance sheet overall. But with these recent failures and lapses in safety, and also basically the company again kind of valuing profit over the principle of what they've been founded on. I think that's the key thing that they need to go back to in order to regain consumer confidence. It's going to take on, unfortunately, probably a shift in just how the company thinks about their safety and security, but also thinking about from going back to their roots of being a company that values innovation, technology, and a company that also values the security of its passengers more than overall. And it's not to say that I believe that Boeing is capable of going back to that. And with that, they will be able to ensure and to regain consumer confidence.
Victoria Bills of Banríon Capital Management, thank you so much for joining us. And that's your Market Insight. You can watch more videos on Reuters.com.